Uranium friends, checking in. Happy New Year, all. Okay, so ETFs, URA, URNM, URNJ. So, what I was talking about on Twitter on Friday, Thursday, whatever it was, I said I didn't believe the move. I wanted to see URA get through this big resistance spot. It did it, back tested it, closed at the highs on Friday. So it's a good look, right? And I think right now the ASX is doing okay. So, very, very short term, and we're just looking at this dump. So when I talk about volume profile, when I see this stuff, right, I just think about it as bag holders, right? So uh, just think about the dip buyers over here, right? So some of them were like, oh, maybe I made a mistake. I'm glad to get out even. You might have had some of that selling here. Maybe you're going to see that here. Maybe you're going to see that here. So these start to be little points that could end up as resistance, right? So just think about it in along those lines because this is where more transactions occur in volume profile. So uh, that little tangent aside, we got through, we back tested, and we held. It's also the 12 EMA level here. So this is what's called a resistance support flip, and it's a daily oversold bounce. So you can see on the RSI. Um, and it's moving pretty quick, right? So URNM and URNJ led the way. So this was a little catch-up move for URA, in a sense, that it just was held down just for one more day, or whatever it was. So it's all good. Things have caught up with each other now. So um, this bounce that's underway is looking pretty good. So if we go to the weeklies, yeah, we took out last week's high on all three of them. So it's another good look, right? But we do have to contend with all of this chop up here. And we're below all the moving averages, including the 200-day moving average. So, again, just like when you're super bullish, right? You buy dips. Well, the bears are looking to do their sell of the rips. It's exactly what's going on here until that changes, right? So URA looks great, especially from a long-term perspective. It's just going to have to deal with the push and pull between the Bulls and the Bears in here until it starts to get back up to these levels and clear them, hopefully, for the next leg up. You could always look at, uranium charts for his wave theory on this stuff because, they probably hold some water. As everybody knows, I'm not a predictive analysis guy, but I do pay attention at least. But the waves, Elliott wave is uh, retail. If you get a lot of retail participation in a sector, I would think that the Elliott waves are actually a little bit more reliable. They do depend, and they're built based upon market psychology and behavior and level. So it's possible. So, but I would look at that stuff also. It doesn't mean you have to be guided by that. And the best way that you can interpret the multiple technical analysts and their different styles in this particular scenarios, look at them all, right? And where does everybody's levels line up, right? So, and that can become an area of confluence, and those levels can be more important. So, don't discount that stuff. I don't use it personally, but I pay attention. So again, these weeklies they've taken out last week's high, thereby as the from technical analysis terms, these lows are set for now. That's all. It doesn't mean that they're going to hold. It's just for now. The one thing I would say about URA is, um, well, I think we're good, right? So that everything is no because we didn't fully close this gap. So, you know, um, this sector would not surprise me that you get a pullback, taking out these lows, which takes out the stops and fills this gap a bit, maybe even undercuts the gap fill for it to run again. We'll see. Individual names will probably give a little bit of a heads up on that, but daily oversold bounce again is underway finally with URA. So you could say that URNM and URNJ were a bit stronger because they didn't get oversold like this, and I did allude to the fact that there's going to be more retail in these two than there will be in this. So it could be just that there was a retail front run of this oversold bounce, which is absolutely possible. But the bounces are underway on the dailies. The weeklies are underway and setting these lows for now. I mean, if you look at it from a level perspective, look at URNJ. There's four taps of this same level. This let's just say, what is it? 1850. What's this? 1835. So just 1840-ish, right? This volume profile. There's a bunch of taps here that say it's a pretty good level. It doesn't mean it holds. Just they just say for now it is. So it's like as a bull, if I'm looking long here, I know this level is gonna. It should be a pretty decent support. If it breaks down, then I have to start looking down here. So it's that's just the way it is. And most of URNM looks exactly the same. URA doesn't, right? So this is the level to hold here. If it doesn't, then we have to be back here. And then we always got to be cognizant of that gap. That's what I would say about sector health right now. It's pretty decent. There's a quick look at some of the names. CCJ, it's a monthly, right? So let's look at the daily. Okay, so the daily bounce is underway, and it's fighting this little 12 EMA average here. But again, it's the same deal, and I posted it on Twitter maybe I don't know, beginning of the week, maybe last week or whatever it was. If 50 doesn't hold, it's a problem for CCJ, and I'm going to be stopped out. But it's starting to look like the spot where we're adding could occur for me, right? So I'm probably going to be looking for a 4-hour higher low to hold, which would be about 51.72 for the real. But you can kind of start to see how it wants to start making this turn, but that doesn't mean it's going to. So that's it with CCJ. It's a little bit weaker, I think, because I did a quickie. I'm just doing the big boards. So look at Denison, right? Much stronger, better bounce than CCJ. So, and it makes some sense. Probably the juniors look like they're going. CCJ's got this Kazakhstan stuff with the JV getting shut down or whatever, and not producing for whenever. Okay, so the fundamental news here might have held it one down. Now, if we're starting to think that there's going to be bullish flow into these ETFs, well, regardless of the fundamental picture, CCJ is going to benefit from those flows, and maybe that's what you're starting to see right here. So, in my opinion, it's gonna pick up off the flows. I would assume, and we still have to get through all of this volume chop here. So there could be some sellers lurking around and some shorts lurking around. The shorts will be looking to sell into these rips. So it could get disastrously choppy for a while, which is going to probably be frustrating because people are going to say, "Oh, we got the bounce; it's finally underway," and it gets smacked down again. Well, yeah, because there's bag holders that are just sick and tired of this sector, and they're going to be looking to get out as close to even or as some profit as possible. It's not going to be everybody, but that's just the dynamic of it. So Denison is a much, much stronger bounce than CCJ, right? So let's just take that into account. Well above its 12 EMA, back tested its 12 EMA, back tested 200-day moving average, held and continued on, closed at the higher day. It's pretty good. Just got to deal with this 50-day moving average right here. But this is also moving well also. So it's pretty good. Encore just, maybe because it had a little bit of a lead, it was a little bit of a day of maybe some slight profit taking, but the bounce was bought also. So this is a good ride that's coming on. And again, I love my falling wedges, and it's a big chart guys thing, but these when they come out of these wedges, it's pretty powerful, right? So it pays to pay attention to those. It's a lot of times you can identify the turns, right? Um, just in the stock in general. We are still in pretty much a daily, weekly, monthly, more like a weekly and monthly downtrend in most of the sector. So, yeah, it's still a weekly downtrend here, right? High, low, lower high, lower low. So, in order to just break that downtrend, we're going to need to get over $4 here on Encore. It's just the way it is. You might get something like this, and it will look like that a lot on in most of the space. You might get something like, okay, there's your weekly tops out there, comes back, makes a high there, and maybe it starts to do something like that, so you can regain an uptrend, right? So even though you didn't take this $4 out, well, you just regained a weekly uptrend there. So we've got room for it here, and that's what we're just looking to see. I don't know if Encore would be the best representative of how we think the space might be going, but it's just an example. Next gen, right? So weekly, that's probably daily falling wedge. Yeah. So look at this. This is a pretty extreme dump, right? So there's another, again, a great example of a falling wedge with a beautiful bull break. So remember, these falling wedges, as brutal as they are, it's a bullish pattern. All right. All it's starting to do is delineates the fact that you're getting these bear breaks of support with less and less follow through. So I mean, this one was a pretty good follow through on that bear break, right? So that's what these falling wedges look like, and when they break out of them, they can be powerful. But let's not be surprised if it backtests. But it's the same deal. Everything next gen also backtested the 200-day moving average, backtested the 12 EMA, and closed at the higher day. So this move coming off, it's still an oversold bounce. There could still be more into this bounce. This bounce could continue. It's just an oversold bounce. When you want to start to see if it's going to wane a little bit, you start to look at the 4-hour chart. But look at this. This is a beautiful 4-hour bull flag. Um, and it still has some room. You want to look at the hourly, and it's the same deal, right? So it's holding this level. $7 is a key hold for next gen on this bounce, right? 715 really. It's all these averages and whatnot. So that's the stuff that you can look at. UEC on the daily. I think it had a falling wedge also. I didn't draw it, but yeah, this is another falling wedge, and it's the break with the back test and then the close near the high of the day. So they're all looking kind of the same, especially these juniors. Stronger than CCJ. That's just there's no question. URG. It's a bit of a give back move there, but again, it's still back tested its resistance break, which is the 12 EMA, and got some bounce on. So not as strong as the other ones, but it makes sense. It's URG, right? It's different. It doesn't go the same as these guys. But let's see what the weekly looks like. Hold on. Yeah, the weekly is, it's meeting some resistance and it's getting sold a little bit, but still this base of support here right around 111, 110. It's a must hold at the moment, right? To continue on. I mean, it lost its weekly uptrend. URG had a little bit of a weekly uptrend going, just no follow through. Now it's lost it. Um, and we got to see how it plays out. Not the best, not my favorite name. I usually just auto buy it right in the dollar range. If I see if the rest of the sector is moving well and it's starting to trend back, it's a good little laggard play. UROY, all looking the same, right? The weak name is no question the CCJ on this bounce, right? So um, take it as you will. If you're looking at it as a laggard play, you want to make sure that there's inflows coming into the ETFs. And that Patrick McGowan guy is saying that there is some. It's not a lot, but there is some, right? So, and the charts are telling you, right? You're getting a little ramp up in volume, but you got your ramp up in volume here too. So it just pays to pay attention. UROY, daily, what is it? Daily, yeah. So the same thing, break. A lot of these charts look alike. Let's see what the weekly looks like here. Yeah, lows are set for now, but there's still a lot of work to do. The charts all look similar. CCJ is actually looking a little bit different. The 4Us, everybody loves to hate this stock, right? So, but back into my big boxes, and this is the value areas where I start looking to position up again, right? Because I know pretty much that I'm wrong if I'm losing these levels. If I lose $4, I know I'm wrong. It's the line in the sand for UUU, and there can be some contention that there's some value here, right? So the 350, 360 to 4 areas really if it loses this last bit of salvation, it's a good. It's could be good for to get cut in half. So that's the stuff that I keep an eye on because you never know, regardless of fundamentals and all that stuff. So you daily bounce is also underway inside the box. Again, everybody it's that the morning came, they dropped it. The whole sector took the dump and got the bounce, much like the regular market. But so UUU daily oversold bounce is underway as well. I'm sure the weekly is set, I would guess. Now it's just death to my charts. Um, so that's UUU. I'm waiting for just a little bit more, but that's the deal on these names. Keep the eyes on the ETFs. I love the fact that it took out this resistance. I love the fact that it back tested it. But these dailies, they're making enough room to set a higher low. Hopefully, this area holds down here on the next drawdown into it. Over and out.